In October, equity markets fell by 2.5%, and the US 10-year yield hit 5%. So, if you didn't have enough heart pumping excitement at Halloween, October is known for being a volatile month in markets, and we're here to tell you why. I'm joined by fund manager Baylee today. And Baylee, the three key market themes in October have to be interest rates and inflation, the geopolitical unrest, and earnings season. So let's start with interest rates and inflation. There is no getting away from it. And in fact, I feel like I can hardly remember a time when we weren't talking about it. But the markets are finally starting to react as though they believe now that interest rates will stay higher for longer. So, what have we seen with markets on inflation?
Exactly. So central banks, they may well have paused their interest rate hiking, but there has been continued pressure on bond yields as investors have priced in that yields would remain higher for longer. Overall, there's still some way to go before we get to central bank targets of inflation of around 2%. And the US economy has been really resilient with high employment and strong economic indicators. So, a good example of how resilient the market in the US was housing sales last month. They were up 12% from the previous month. And this is in an environment where 30-year mortgages are nearing 8%.
Oh, that hurts. Those are eye-watering rates for sure. Um, if we move on now to the geopolitical unrest, this year has essentially seen two wars. We have the unabating Russian invasion in Ukraine, and now in the Middle East with Israel and Gaza. These are bringing with them concerns on so many levels. And from a market perspective, how are we seeing markets react?
We are seeing some reactions here, particularly with oil prices, which rose by 7.5% in early October in response to the situation in the Middle East. And in these situations, we also see the flight to safe haven assets like gold, which was up 7.3% in October. But that said, historically, markets have been pretty resilient to geopolitical events.
So speaking of resilient markets, moves on to our third point, earnings season. October means earnings season. This week has actually seen some of the most hotly anticipated public companies release their earnings. So, what are we seeing coming out of earnings season so far, Bailey?
So earnings season is around 6 weeks long. It's a really active time for investors as new data is unveiled. And so far, we've seen relatively robust earnings in the US. However, markets seem to be punishing those that have a slight miss, and they aren't really rewarding those with a big beat. We can look at Google or Alphabet. They had one division that had a slight miss in earnings, and the stock price dropped around 5% after hours. And on the other hand, you have Microsoft that had a big beat in earnings, but only saw a small uptick in their stock price.
It's not very forgiving, certainly. Speaking on the topic of big techs, we keep hearing reference to the big techs as the Magnificent Seven. Bailey, can you list out the Magnificent Seven?
So, right, this is going to be a little bit embarrassing, but I remember it with Mama Ant. So we have Microsoft, Apple, Meta, and Amazon. That's the mama part. And then Alphabet, Nvidia, and Tesla. And
That's fantastic. I love that. And that will also, I think, probably help all of us remember them as well. But as you know, we like to call out a stat of the month, which does relate to the Magnificent Seven. This month's stat is that the S&P 500 year to date is up 10.5%, while the S&P 493, so excluding those seven mega tech companies, is flat. So it shows you the incredible impact those seven tech companies are having in markets. So that wraps up this week's episode. Thank you, Bailey. Thank you all for watching, and join us again next week for another topic that's caught our eye.